Bitcoin is going to zero.
Great night, everyone, and welcome with Trading with OC. Hopefully, you guys are doing fantastic. And let's continue. Quick announcement: tomorrow there's not going to be class at night. We're starting the heavy. Today we started the heavy testing and preparing for, of course, this upcoming or the next upcoming weekend. But like it's gonna be full pack of things here in Chart or there in Chart Private. So I'm not gonna be able to keep up with tomorrow's class. Most likely, I'm not sure, but I think tomorrow and Monday the classes are gonna be canceled. And I'll try to keep up with the rest of the night classes. All right, so other than that, let's make the most out of today. Today is the last part of the series naked charts. Once again, starting from zero, and I think it's playing out very nicely. All right, so let's go and check out you guys, because you guys are the most important part of the show. And we got Gary in the house. How is it going, Gary? Welcome, my friend. Thanks so much for stopping by. Really appreciate you. We also have 2Dop in the house. How is it going? Great to have you. LFG, let's go. And Sheep 333, so 3333. What's up? Welcome. Great to have you. I'm seeing that weird stuff happening. Like you see, like kind of look at the names not matching really. But, well, it is what it is. We'll see how we can manage that. Maybe if I refresh it, don't know. We'll try to do it in a bit. All right, so let's go to the charts and let's take a look at what's going on. All right, so we're back in the charts. Remember, we are keeping a track on the Solana 15 minutes. So far we're doing great. Couple of things. Remember, let's bring this up. We had on our heads this huge trend line in here. Not only that, we were also looking at this other trend line, and we have the first breakout, retest, right? And then higher high. We were expecting a higher high, but we had an equal or even lower high, and then looking for a lower low or a higher low. We got that higher low in here. So after a higher low, what is it coming? Well, most likely a higher high. So how do we define that area? Of course, support and resistances. So where is our support and resistances? Here, here, here. You can see that we also make that push, and this was a fake out. This was a fake out because look at that big body candle here breaking through, telling everyone, yes, we're going to the moon, right? Not only that, it also started riding across this other trend line. So very important. Here we start moving to the upside. Something that you don't really need to know, but it works really great to know it. It is 1 second, guys. Shoot. Sorry. So I got my dog here playing with my camera. So let's get it. All right, so right here at this point, we even started writing something that you don't need to know, but it's of course helpful. It is knowing some patterns, right? And when we start having some up range like this, they tend to break to the downside. Look at that, those up ranges, they tend to break to the downside, especially on areas where we have high resistance. But this is an up range. Look at that, breakout, retest, downwards. Once again, that little up range, breakout, retest, downwards. All right, but that's a little bit too in advance. So where we left out, especially yesterday, this was it. All right, so we had the breakout here. We had some resistances at this point, so some interesting zones. All right, we were talking about having a possible rejection, continuation, come back down, your entry, continuation. We had the flip of the ribbon playing out right in here. There it is, right there. Then that's telling you, you know what, we're not getting that retest. So here's an important thing. Do you rather jump in or let it go? Right? Because, I mean, we were estimating this entry. And remember, we left out a 25% moonback. All right. So would you be adding a little bit more? That's my question. That is entirely up to you. All right. Sometimes I would tell you, yes, I would. Sometimes I would tell you, no, I wouldn't. And that is most likely depending on two special things. First, my sentiment. All right. So your state of emotion really impacts on the decision that you take. All right. So that's why when you're very euphoric, go take a walk, right? When you're very sad or something like that, or worried or stressed out, go take a walk. All right. So don't trade with real money when you're feeling, you know, like peak emotions in there. All right. So in this case, I would have told you, yes, I would have taken it because I have the flip of the ribbon, and this is actually creating a goose head. But goose heads are for the advanced section of trading. All right, so just looking at what we got without the goose head details and stuff, well, then maybe you wouldn't have not entered here, which is fine. All right, don't get me wrong, not taking this last trade is fine. It's totally fine. Why? Because then you're looking for the hiccup. All right, you get the hiccup just like we have the hiccup in here. All right, and then you start looking for possible re-entries. All right, so first of all, it's not about the breakout, right? It's not about the breakout. It's about your retest, all right? And you still have good money flowing here, so you could have entered right there. The perfect, if you took the long, great. I mean, even in here, great. You stop loss right below the zero, your previous low, and give yourself a little bit of wiggle room, all right? And then, as soon as you are on profits, remember, look at that big body candle, full candle in the green, either on the first one or on the second candle, it doesn't matter. That's where you move your stop to entry, right? Perfect. You move your stop to entry here. What happens? The thing retraces and you go, oh, maybe flip of the ribbon. Maybe that's another re-entry. Perfect. All right. So you look for the next flip of the ribbon. And what is that flip of the ribbon happening? Right in here. All right. Right after we are flipping. Where are you here? Well, maybe. Are you willing to take this in? This is where things start changing. All right. This is where trading start getting a little worried, right? I mean, this is when you start going, hey, should I not? I mean, what should I be doing? I'm feeling things, right? I should not be feeling. What is my strategy? I'm buy low, sell high. All right. Am I low? Right. And then high should be up here. Or, I mean, I do have money flow. I'm pointing up and my 37 is pointing up. OC told me that I could be good, or I should be good longing that, right? And guys, let's actually go for that. All right. Perfect. You long this thing at the candle closure. Perfect. First candle in the green, right? You move your stop to entry and you get stopped out on the very next candle. You see how now we have two stop outs in a row? All right. And then what's next? Oh, right now I'm below the zero line, but I still have that money flow. So I should be good to go, right? So I'm going to be waiting for the next support, maybe the support. All right, maybe I can open up a position here. And just so you know, we already have lost it. And basically, we lost it a trade ago. I'm going to keep explaining, but in the meantime, you're getting back into that down spiral. Why? Because you are stuck with the idea of longing the thing, right? You're stuck with the idea with longing the thing, and then guess what? You stopped out. All right. I know that I'm going to be maybe getting a couple of stopped outs, so let's go once again. And oh, there it is. I have a flip of the ribbon at the bottom. This is my chance. And look at that. It's bouncing out of the whatever this line is, right? Well, just so you know, that was the previous trend line. So, oh, now it makes sense, right? This was the retest, right? And I have my flip of the ribbon, and I have my reversal. All right, let's go and long this thing, right? And then you just long it, candle closer right here, and then you, oh, don't move that. All right, and then you go and let me lock this, change your stop loss in here, right? Once again, put it at lows, and then you wait, you wait, you wait. It's about to take you out, right? It's about to take you out, and boom. Yeah, let's get it. Let's get it. I knew it. I knew it. And then boom, it takes you out, right? And you don't know what's going on. And you don't know what's going on. I mean, you're doing things right, right? You're doing things right, aren't you? Well, we lost it, right? That's where you start trying to long, trying to long, trying to long, trying to long until you get here. And then you go, all right, let's catch the bottom, right? Guess what? Maybe. But how many losses you got? 1, 2, 3, 4, maybe 5, and then you catch the low. So what's happening here? All pumping right now? No, it's not. Well, I don't think so. Well, if you're only 3 minutes, maybe. But this one, I don't know. I don't know. For me, that's not pumping. I mean, pumping or dumping will be this. Pumping for me would be like, come on, maybe this one like this. I will consider that pumping, but maybe in the higher time frames. But yeah, depending on your perspective. Depending on your perspective. All right, so now let's rinse and repeat once again. So let's figure out where the issue was. All right, and by the way, it was a psychological issue here. So the very first entry, that was all right. I mean, if you didn't cut the very first one, right? If you didn't cut the secondary, that's fine. This one's still all right. Breakout retest. All right, perfect. We can live with that. But at this point, there's something happening across the board. Do you guys know what's happening across the board? Yeah. Chunky candles. It's happening across the board, right? He's just watching you. He's just watching you, right? He's just, oh, you're longing, right? You're longing, bro. I'm watching, right? You're like laser eyes here, right? Yeah, long it. I know you want to long it, right? So the point is that you have lost yourself in the microstructuring there, right? You're not looking at the bigger picture. So let's go back out, all right? And let's get back at the bigger picture. So here's the bigger picture. Perfect. We already have, right, this high. Let's actually just get rid of it. Just so it's not messing around with the analysis, all right? Perfect. And this is where we left out. And this is what it took us to zoom in. But then we got lost and never zoomed back out. That was the issue, right? That was the issue. So let's take a look at one more time. Low, high, low. Perfect. We're talking about maybe a high and then a what? Maybe a what? A low. Or your possible re-entry and getting to the resistance. So you are on a resistance. You are on the resistance. It didn't play it out your come back down and support. Well, that's it. I mean, I'm sorry. We shouldn't be like so within that tiny itty bitty chunky candles, right? Trying to catch the very tippy top or very down or a continuation. The actual macro structure is telling you higher low, right? Higher high, right? I mean, yeah, it could be deceptive. We could have a lower high and then a lower low, right? We knew that. But we're talking about the support resistances, the same support resistances that has been playing out over and over and over and over. Why would they not work right now? Well, because of manipulation, of course, right? But at the end of it all, we need to keep track on what has worked, right? And have a plan B based on that, right? Not based on whatever it didn't work. So let's see, how would I be doing then things differently? Or how could we be doing things differently? Let's zoom back in and left it out. All right, perfect. This is it. So we're looking for a breakout. We're looking for the retest. All right, the thing is pumping here, is pushing, right? And then we have the flip of the ribbon to the upside. All right, perfect. Let's just even say that, all right, we did not cut it. This is too high. We're on resistances. We don't buy resistances. Perfect. Sorry. Yeah, we don't buy resistances, right? So we let it go. Perfect. We're starting to flag out in here. Great. So right here, we're waiting for maybe the break of structured trading and staying or bouncing above this zone. We want to long in here on the way up. We want to long in here on the way up. We want to long in here on the way up. We want to maybe long in here. Not really, but on the way up. We want to long in here on the way up. We want to long in here on the way up. But very important, this is below. So we not really, right? This is below. So not really, right? So you get the point. We are at resistance below the zero line. Not a good area. We are on support below the zero line. Okay area with danger, right? So like right now, we are at support, or we were at support right here. Support below the zero line, flip of the ribbon. All right, good enough. Good enough with danger. All right, so you want to long somewhere around here. All right. Well, of course, we all want to catch the flip of the ribbon, right? I mean, that's why the FOR exists, or is a thing, right? Because everybody wants to catch the bottom, and I'm not different from wanting any other thing, right? I still want to catch the bottom, but I'm okay not doing so, right? So let's clean this up for a little bit here. All right, let's see what else do we have. And then you got your first entry here, right? You stopped out, and that is the point when you need to look back again. That's the point when you need to zoom out. Then you go. All right. Let's actually push it back, because right now it's too obvious, right? At this point, now that things had happened, it's too obvious. But back in the day, it wasn't. Or back in here, this looked like, hey, this wants to pump, brother, right? But... and I mean, you were still all right. That's why I mentioned that was still all right, because you were above the zero line. Looking for maybe that continuation, flip of the ribbon. Perfect. I mean, that was a legit mistake, right? And, well, it is what it is. So let's go one more candle, right? One more candle, and you get your stopped out. There it is. All right. Maybe we're looking for this right there. All right. But we're at the top below the zero line. This is not good. Maybe we can wait a little bit more. Remember, we're looking for these movements, so it doesn't really matter if you start buying here, here, or there. All right, until we get to other resistance areas. So, but once again, let's not dive so in depth that we get lost in lost in the detail, right? Just saying. Let me see. All right, so are we live? Yes, I think so. All right, perfect. By the way, guys, quick advice. Look, quick advice. Come on. Quick reminder. Click that like button. Really helps with the algorithm. All right. So what's up next in here? Well, we are now on the support. We have the flip of the ribbon. Perfect. I mean, we could be looking for a possible long in here. We still have that money flow, and we will need to wait for the actual reaction. All right. So let's go. Click it, and we're doing nothing. And wait. I need to let's say stay. But how do I? Here it is. And the thing is moving up, and this is not. Here's a little trick, right? We're gonna keep it simple, but here's a little trick. The thing is moving up, the volume is moving up, the momentum is moving up, and the price action just is not. Not only is not, you start having that absorption shown at the top. Danger, Will Robinson, right? You're losing money flow. The thing is curling back around. That's not a good area to long it. All right. So let's just wait for a little bit more. Let's see, maybe. Oh, now it's looking great. Now it's looking good. All right. and then it start turning back around. Wait for your true 7 to actually break through that zero line, right? Wait for your true 7 to break through the zero line. Once that happens, you're testing lows. Remember, you should be zooming out. Not only that, now that you're breaking here, now it's time to rinse and repeat every single thing that we did before, right? In fact, remember your previous analysis. That's why I like to leave my previous analysis. Is it messy? Yes, a lot, all right? But I can see the arrow, right? And see, oh, wait, I was also looking for a support area right in here where one of my trend lines coincide with maybe the other one of my trend lines, right? So let's move things out of the way. Let's zoom out, right? And now things starting to get another perspective. High, lower high, right? Lower high. Is that enough? Well, low, lower, low, lower, low. Is that enough? Maybe that's a bull flag, but you would say it. All right. But still, even on that bull flag, you want to wait for that bull flag to break. You already have a rejection on your oscillator. I think that's actually the call out for help, right? I mean, at this point, the call out for action. Right here is where you should be taking an action. So let's just go. There it is. Oh yeah, bouncing, maybe coming back down, and the thing is dropping, and the thing is also dropping. That's your secondary chance to get in. All right. So at this point, we have broken this trend line, right? We are following this other trend line. So there, everything is bearish. Everything is bearish. What is the next support zone? Right down below here or right down below here, right? So either this area here or this area right there. So you short it. Perfect. You short it all the way down. Take your profits, and that's it. Now, this is the area where we are at, all right? Thinking on how things are playing out, we should be looking for a long position out of this area. Not quite there yet, because we are at the bottom and we're curling back around while this thing is pushing down. That's telling me that most likely we're going to drop hard. So far, that's what it's telling me, all right? So, let me just get rid of these things. There it is. And let's push forward. All right. So where are we right now? Let me just get rid of this. Let's just leave it. Basically, we are still on an up-ranging channel. Not only that, we have broken that channel. What happened with those channels? Break down. What happened to those channels? Break down. What happens with this channel? Breaks down. Find support and bounces. What happened with this channel? Break down. I think we're gonna find support and maybe bounces. Where? Most likely here. All right. We are still above the zero line. We're looking for that flip of the ribbon. We don't have quite enough money flow. It's not looking that bad. We can still have that low. So the next area, most logical area, we'll be looking for a possible long somewhere around here. You stop right below this area. Give yourself that little wiggle room. And we're going to be aiming to the next zone up here. Easy peasy, lemon squeezy. So, other than that, that's what we got so far. Questions, guys, questions. And look at that. How many indicators? 1. Let's actually bring the rest of them, right? Let's actually look at fire test our setup. So look at this. We're having, oh, this is good. This is good. Breakout. Look at that. BOC. Retest. Maybe we'll come back down to the same area. All right. Looking great. Let's take a look at something else. Let's see. What did we have here? Predicted ranges. Was that the one? Let me see. Oh, zones. Oh, look at that. On the zone. Perfect. And bottom zone, top zone. Perfect. Right, so we're still within the range. Great. Let's bring the other one in here. So liquidity zones at the bottom and at the top. Once again, so I do believe that we need to go find that liquidity. Maybe it creates still a higher low, right? And, well, flipping back around. Important, if you're having difficulties reading this, right-click inverted. What does it seem like it? It doesn't seem like it wants to create a downslope? I mean, that's almost the same story, right? That is happening here. But inverted, right? Right, so you see how things get a different perspective when you invert it. They really fall into place, isn't it? All right. What else? What else do we got in here? Market Oracle Pro Plus. What do we had in there? We had Dynamic Reactor. Perfect. Let's get it. Let's see how's our Dynamic Reactor doing. All right. So our first resistance in here. Great. So we're going to be taking TP number 1. If we can nail this, TP number 1, right? And that's it. Important. If we start losing the 0 line and we're not pushing above your dynamic reactor, the answer is going to be lower. All right? It's going to be lower. Why? Because time is ticking and the thing is not moving. So the dotted resistance is as a magnet. No, the resistance are not magnets. Order blocks are. Order blocks, liquidity zones, prime blocks, those are magnets. Why? Because, I mean, don't get me wrong. Support resistance can be magnets, all right? But there's no way that I can tell you whether it is or not a magnet just based on the support resistance dashed line. Why? Because there's nothing telling me for sure that there is a liquidity zone in there. There's a resistance, right? In the past. So I'm assuming that the same area is going to become an area of either liquidity or rejection, if that makes sense. What it is considered a magnet will be an order block, a prime block, a liquidity zone. And why? Because it is measuring the liquidity. Because it's measuring the liquidity. Yes, exactly. Exactly. You got it. Yes. Yes, perfect. But I mean, let's actually bring this up because you have a great question, right? I would say that is one of those like a little bit complicated questions, but very interesting one. Because, and I think I saw this thing happening right now. Let's go for the support resistances, right? Oh, this is not the one, but we have a prime block in here. Let me see. Maybe, where's my support resistances? It's taking forever. All right, perfect. This is the dashed line, right? But also within that dashed line, we have the liquidity measurements, right? So, I mean, is a dashed line magnetic? Well, it's not the dashed line itself, right? Because the dashed line is only measuring how strong of a resistance that area is, right? But the actual liquidity that creates the magnetism, right? The liquidity is what creates the magnetism. It's also here and there. So thinking the dashed line as a magnet is not, it's not wrong. It's not wrong. Because it's bonded to where the liquidity is at, right? Naturally, stronger areas would tend to call back traders for that zone, right? Because it bounced that right there. But yes, it's a little like faint line between yes or no, right? But yeah, I mean, I'm just adding in at this point. Long story short, no, it doesn't carry magnetism. But it tends to be surrounded with things that does carry magnetism, like liquidity zones, prime blocks, order blocks. But yeah. All right, so far, oh, look at that, from bumping to dumping. I think, there you go, look at that. It's very simple, right? I mean, when you look out, it's very simple. Remember, I mean, we all love cranky candles, and we all hate chunky candles, right? It's right there peeking at the end of your screen, watching you to get close into that chunkiness. So don't get lost into that chunkiness. I mean, remember, zoom out, look for the structure. The only way that I would kind of like go for into zooming in will be like, all right, I'm not really, or I cannot really see the area, right? Or to see, oh, am I going to be choosing at the top or at the bottom, right? Where do I have more wicks at the bottom? When you already know the zone that you want to enter, that's when you zoom in just to pinpoint a better entry, right? Like, for example, look at all of those ends, look at all of those tops, all right? So that is how I could be refining my possible entry, right? I would say that that is the only justification to actually zoom in into the charts. So yeah, so that's gonna be it for today, guys. I need to go and take some rest. I would leave you out here with your good body chunky candles. And as always, thank you guys so much for your time and patience. Keep it up. What does the what is it? What does it mean if there are wicks below the POC? Nothing really. It's just like a support and resistance. Let's go. That's another good question. I'm gonna make the time for that. It's just like grabbing a support and resistance, right? The POC, it's an average point of control. But what does the point of control tell you? It is where most of the exchange of value is at. It is not measuring candlesticks. It's not measuring candle wicks. It's measuring exchange of value. So the actual POC will be, for example, let's go to a cleaner chart. So let's do that logic. If we have movement, right? We know there is a change of value, exchange of value. I had Solana, you got cash, right? We exchanged it. That is exchange of value. I got cash, you got Solana, we exchange it. That's also exchange of value, all right? So if you have, for example, this area right here, right? The exchange of value stayed more, stood longer in here. Typically, not always, but typically, this is going to concentrate the average on the exchange of value, which is the POC, all right? The point of control, but it's point of control of money flow, all right? So when is the money flow rushing in and out into areas? In this kind of areas and in these kind of areas. So depending on the volume, you might have a POC like this, and sometimes a little bit counterintuitive, like in here if we only took a look at these areas. But then you have, for example, this huge wick that is averaging down just a little bit where that POC is at. So you might be seeing your POC like that. So what does it mean that the candles cross it? Nothing really, because it's not measuring candles. It's measuring where the average of the exchange of value happened. That is a rough support and resistance, if that makes sense, right? And as you can see, acted as sort of support, right? Acted as sort of resistance, acted as sort of support, acted as sort of support, acted as sort of resistance, right? And those actually takes the candles across it because it's an average, right? It's an average of something which is the money flow average, where the exchange of value happened. So it is not really what it means. It's just do expect the money flow to be crossed by a couple of candles, but also it's a pretty good resistance area or support area. But do expect some wicking action in there. So let's actually see. Do we have the money flow turned on? No. Where was it? I think was it in here? Maybe here. Let's just get rid of chunky candles in the meantime. There it is. Right? So you can see, and well, not you can see, but knowing now how it works, there was a lot of exchange value here. There was a lot of exchange value here. There was a lot of exchange value in those areas, right? And there was also a lot of liquidity grabbing here, a lot of liquidity grabbing here because it moved faster. So that's why your PLC was supposed to be in here, but then it goes draw up based on how the exchange of liquidity. Oh, look at that. Also another range, right? So based on how that liquidity between those two happened, or the exchange of value. So it's not like let me just turn this off. Triangles, just getting to my head. Here it is. It's not like it is supposed to be something perfect, but it's giving you where the average of the exchange value happened, which is a very good support resistance, or sort of support resistance, if that makes sense. All right, so that's gonna be it, guys. Thank you so much for jumping in. Really appreciate it, guys. And I love your questions, so keep bringing them up. Bring it on. Remember, tomorrow class is gonna be suspended. Monday's class most likely is also gonna be suspended, but Tuesday I'll try to be around here, and it will be till the Black Friday event is over. So I will be intermittent coming back on. All right, but I'll let you know, guys, in advance. But so far, tomorrow's class gets canceled. Thank you so much for joining, and as always, see you guys on Tuesday.
Bitcoin is going to zero. Zero.